Yeah, we can probably go ahead and get started. So I'm gonna share my video on screen here shortly, and then I just put in the chat the document we're going to be going over for my strategy if you guys want to pull that up. But let me get my screen shared, and yeah, we'll get started. Just let me know when you guys can see my screen. Should hopefully be able to see my face and my screen. Did some technical troubleshooting the other day. You guys see my screen all right? Just let me know in the chat. Perfect. Yeah, so I guess before we dive in too much, just a little brief intro of myself for those of you that weren't able to make the AMA. I guess my camera's over here. I'm Alex Fibonacci. I've been using FX Replay for a little over a year now. Was an actuarial consultant for 6 years before kind of letting that go and going full steam ahead with trading the last 2.5 years. It's been a journey, playing with NFTs, crypto trading, traditional finance, getting funded with CFD prop firms and getting some payouts and then losing those because of regulations. So I've kind of been through the ups and downs. I'm not some trading guru that's gonna give you a 90% win rate, trading strategy, but I've used FX Replay a lot, and I have a pretty analytical background that's helped me with backtesting and developing strategies, optimizing them. And I really want to share with you guys what's worked well for me and hopefully help it translate to your backtesting and trading as well. So yeah, what I'm going to share with you guys today is actually the first edge that I ever developed with FX Replay. About a year ago, I found the book Trading in the Zone by Mark Douglas, and for those of you that have read it, really recommend it. And it's the first time I ever learned about backtesting, and this is a strategy I developed based on kind of pattern recognition. It's you guys might laugh, it's kind of falling and rising wedges, but I noticed that more often than not, when they broke out of those, they would kind of retest and continue. So started with that idea and developed this strategy over time. And this screen I'm sharing for you guys specifically is gold, XAU USD specifically. So yeah, I share with you guys. Oh, I do have to do this disclaimer, Matt said before we start. So I'll put this up here for a moment for you guys to kind of read through, but pretty broad disclaimer about trading. Even though this model in particular, I was able to get some funded accounts and payouts. There's no guarantee it would do the same for you guys. You can read all of this. There's obviously a lot of risk with trading and all that stuff. I'm not a financial advisor, et cetera, et cetera. So it's kind of the precursor, I guess, before we dive into that. But now that I've done that, let's pivot over to this kind of chart pattern and breakdown strategy. So this chart breakdown and retrace strategy I've tested, and it works on, from past data, it has worked on the US 30, the S&P, and gold. It does not work very well on the NASDAQ. Could work well on other pairs, but these are the ones that I have tested. It's based on the 15-minute time frame, and given that I'm in the US, I've only tested this during the New York session. Obviously, for indices, that's kind of the main time to trade them anyways. I suspect that it could work for gold on other sessions as well, but you need to backtest that. And I basically found that entries between kind of New York open through 1 Eastern are kind of the best time to trade this strategy. So a couple kind of definitions before we get into the entry models specifically. The first one I'll kind of walk you guys through is kind of what I defined as a breakout for this strategy. So say we have a falling wedge here. There's kind of two different ways we could kind of say we've officially broken out of it. One would be basically 2 consecutive green candles in this case, kind of closing above the falling wedge, or vice versa if it was a rising wedge, 2 red candles. And then the second example of a breakout that I was able to find is if there's a huge kind of candle that thrusts up out of the channel itself, even if the next candle is red, as long as it also closes beyond the trend line, then I would also kind of consider that a valid breakout. The cases where I wouldn't consider it is if it's kind of a small candle that closes above, and then it's you don't get that consecutive 2 candles in a row, or if the second candle closes back kind of in the trend line, that would be a fake out essentially. So this is kind of what I use to define proper breakouts for the strategy. And then I also have a kind of concept that you might have heard of called a measured move. And for falling wedges or rising wedges in this case, you basically take the vertical distance between kind of where the second trend line starts to the first one, and you kind of take this orange line, for example, and then whenever you see your retests, you basically add that onto the chart. And the way that I used this for this strategy was basically when I was mapping out my take profit level, I didn't want to target anything really past this measured move. I wanted to make sure my take profit level was like within it, to make sure I wasn't like being crazy ambitious with a super high take profit. So these are kind of two concepts here, and feel free to stop me at any point if there's questions about different trading concepts, charting, different examples I'm going to go through, etc. But I'm going to go through the three kind of trade triggers that I developed with the strategy, and then we'll dive into FX Replay to kind of look through some. So the first one is kind of what I would say your standard kind of breakout and retest. So you can see here on this chart here, I've got a kind of rising wedge here from these two trend lines. We had a breakdown from the trend line right here with two red candles back to back. So that confirms our breakdown. And then for the retest, we're just literally going to be entering exactly where it retests this kind of bottom trend line. And for the stop loss, I called it kind of two lines of defense past the entry. And in this case, I was looking for a order block, a fair value gap, or a higher low. And since it'll be a little easier to show you guys on the chart, but there was a big fair value gap right here. Since that was tagged on the entry, I didn't include that as one of the lines of defense, so I used this kind of order block and high a little bit higher. And we'll go through some specific examples so you guys can see, but essentially looking for, what are some things beyond my entry point that could also kind of help hold up price for hitting my stop loss, and I try to go behind those things. And then for the take profit level, it was basically the first order block or fair value gap that gives me at least 2R, and ideally before the measured move. So that's kind of the first entry trigger. Yeah, order blocks are great. It's kind of the first entry trigger, I guess, for this model. Pretty simple. We have a rising wedge in this case, breakdown, retest, enter on the retest, and try to target out 2R. The second one was basically a breakout, and this had to be like early session. I noticed a lot of time, kind of early New York session, there would be a breakout from one of these patterns, and like I would never get the retest. So after doing some testing, I identified this kind of second model that if it's basically the first kind of two candles of market open, so the candle right before market open or the kind of next two candles after, I would just market enter like at that candle close, and I would put my stop loss kind of below the candle that broke out. So you can see here we had a falling wedge and then a nice, I think market opens like kind of around where this red candle is, and so we had a nice breakout candle here that closed above the wedge, and we just market entered kind of at the close and put the open or stop loss at the open of that candle. The third one didn't happen as frequently, but so I noticed basically like if we had a breakdown and retest a little bit before New York, often it wouldn't come back and retest it. So I basically came up with this recent retest model or entry that you could do a market entry right at kind of New York open. And in this case, I would kind of look, where would my stop have been on that initial retest, kind of place my stop loss there. And as long as I can get that, 2R, then I'd be basically fine doing a market entry. So those are the three entry triggers. We're going to go through a bunch of examples in FX Replay. But I did have a bunch of kind of other rules. When I was first testing this, I was like, the news was like a plague. Like I wanted to avoid it. So for this specific backtest, I was closing any trades if there was pre-market news the next day and it hadn't hit my take profit or stop loss. I'd close basically at 4 p.m. Eastern. Also, if there was high impact red folder news, CPI, FOMC, all that stuff, I would kind of close the trade to avoid that news. But I do think, as I've learned a little bit that some news is, not as impactful as others, I do think that some of the news events that happen like early morning around 10 a.m. Eastern you could probably hold through those fine, but I didn't go through and like fully backtest that one. So you'll see a lot of trades that are kind of closed a bit early with the backtest that I did for this. I also will mention that I do think the strategy generally is better with CFDs, that you can hold, to the next day or over the weekend if you want to. Obviously, with futures, you don't have that capability. So a lot of times, you would have to kind of keep closing the trades early before allowing the price action to develop. So I do recommend, if this is something you're interested in, probably looking more at CFDs versus futures, if that's something that you're able to trade. But nonetheless, it's a kind of interesting model, and I want to at least show you guys kind of what all goes into like developing a model. What else? No trade management for this. I used FX Replay's analytics tool here, and this could have profit and break even. Like 16 out of 200 trades is super low. Basically, this could have profit or break even shows you how many trades went over 1.2 R in profit and then came back on you as a loss. And so it kind of helps you give information on, do you need to do trade management or just kind of let the trades play out. And in this case, less than 10% of the trades were kind of going a little bit in profit and coming back on me. So I didn't do any trade management for the strategy. I had a couple other rules. If the breakout, basically took all the liquidity before doing the retest, I, wouldn't enter on the retests. Needed to make sure the retest wasn't happening, past the, making a new, local high essentially. And then the breakout had to be in line with like the expected move. So I only counted it if it was a breakdown from a rising wedge or a break up from a falling wedge. So these kind of a few different rules, and I've got the different back tests that I shared in this document you guys can look through, but I'm definitely going to be focused on gold specifically for today, because you can trade it in multiple sessions, and I just wanted to focus on one of them. So overall, what we're seeing here from the back test is 200 trade sample size. I did basically a 3-year back test from early 2020 through kind of end of 2022, so 3 years, and it had about 65% win rate with average risk reward of 1.63. And the reason this is lower than 2 is because of those trades that we had to keep closing early because of news or weekends or different things. About 150 R. I started with the 100K balance with $1,000 risk per trade, so about 50 R per year. So it's nothing crazy, but this was enough to help me, get funded with some accounts, pass some challenges, and get a few payouts. With that, I want to kind of pivot over to FX Replay itself. And, this session is going to be a little different than future ones. Obviously, I've already done the back test here, so we're going to be focusing kind of like reviewing the trades that I had taken and kind of walking through why I took them and different things like that. In the future, we'll be kind of back testing on the fly new models that you guys are going to suggest and that I'm going to research. But for today, I want to kind of, review the back testing that I have done and kind of go from there. So you guys might notice my screen's a little dark. I'm kind of obsessed with dark mode. And if you guys do want to avoid the white screen, all you got to do is change the background here to black on your chart and change the text to like gray. If you guys don't want to deal with the white screens when you're backtesting. But so we'll start with this, I think mid-April. It's kind of what I want to show you guys for a while. And then we'll try to wrap up about, 10, 15 minutes before the hour and just do kind of Q&A and stuff like that. So this is, we had a falling wedge here during New York session. We're basically at the start of New York session. So I'm looking for a retest right here. I like to use these long short tools to kind of map out my entry and my stop loss. In this case, the stop loss, we basically had kind of 2 order blocks pretty close to each other. And so we had kind of one here and the second one here. So those are my 2 lines of defense for the stop loss. And then, I believe this fair value gap up here is kind of what I targeted for the trade. And this is potential 3R. So you guys know how this works. We'll kind of come up here, and I did 1% of initial balance, $1,000. It's a limit buy. And I believe this one would have had to close before news. So we'll kind of just go a little slow with this one. So we had, I think this is FOMC day, yeah. So in the backtest, I closed this one a little bit early, but it would have worked out great for a nice win after FOMC. And then, yeah, that was it for this trade. So this is a pretty standard retest. We had a breakout here with these two green candles. The trend line here, you can see that I had drawn is basically connecting these candles here. And initially, before market open, it would have been here, but after this kind of wick pre-market, it would have bumped up to there. So pretty standard falling wedge with a breakout to the upside. Nice 3R win in this case. And then if you guys aren't familiar with the settings, you can use these go-to settings to set kind of where you want to go to next. I'm basically doing New York Open for every day, so I'll just set all of these to New York Open, and then I'll just say go to next session is generally kind of how I use that. And this strategy in particular doesn't always have a ton of trades, so I might jump forward a little bit. I guess we'll kind of walk through a few days, but yeah, there are plenty of days where there aren't any really trades, especially after big news. You kind of need the price structure to develop a little bit. There's not really any low over here for you to look for a kind of falling wedge. So eventually it did come down and tag this low here. So this is kind of like a broad falling wedge that we had out here, but there weren't any trades on this day in particular. So go to the next session. And dismiss this. So this one was where it came close to retesting this trend line that we had, but there wasn't actually a trade on this one. That does also happen sometimes, and you just kind of gotta let it go. There's not always going to be, you're not going to catch every move, and that's okay. But as long as you're only taking the ones you should be, you'll be a lot better than trying to chase every little move. But yeah, it did come close to retesting in this case, but ultimately did not trigger in any trades for this day. So we'll go forward a couple more days, and then we'll kind of jump towards actual trades. So yeah, even though we didn't catch these moves, you can see more often than not when price does kind of break up out of falling wedges, it does generally trend to the upside. So that's kind of the basis of this model, is trying to catch those moves and enter on the way. So this next day, not really much. This is a pretty explosive move up, so not really anything we could look to short off of this, and just kind of consolidated up here this next day. The next session, there's a note I have here that we did have kind of a valid breakout here, but it was pretty explosive, and you can notice here that we kind of took out this liquidity up here. And so by the time it eventually came back and retested, I wasn't really interested in taking this retest anymore, because it's already kind of taken this liquidity up here. So that was another kind of rule I have in the strategy, is if it, the breakout kind of makes the move already, then I wasn't interested in the retests. So I did pass on that trade, and that, would have been a loss. Kind of rejected back down there. So the next day, let's see. So we had kind of a market entry on this day, I believe. Yeah. Or sorry, it would have been at this candle. I need to change these to 715. Just give me 1 second. 9:15. And this is one of those like early morning trades where like these PMI, it's usually adds a little volatility, but it's usually nothing crazy. And I am curious, if I went back through the backtest, that I could probably hold these and catch more winners than losers. Obviously there's going to be some losers as well, but like some of the time in the backtest, I would only be in these trades like 30 minutes before these news events. And that's just kind of, I was trying to avoid news because it adds a sense of randomness, but oftentimes, you can still catch profits from those. I think this one, yeah, probably would have been like a decent win if I just let it play out. So the next day we had a recent retest. So to kind of show you guys the wedge, we had a falling wedge here, and it does take a little bit of like pattern recognition to see these trades in like practice. Obviously, that's what backtesting is helpful with. But I kind of noticed that there was a reaction right off this trend line, which kind of lined up with this previous kind of, I guess, test up here. So that's kind of why I decided to put the trend line here. And then we had these two, a lower low down here for our kind of, I guess, lower range of the trend line. And so this is what one of these recent retest trades, and the measured move was definitely, much higher than my take profit. Take the difference between these two lines, add it to where the retest is. So I was pretty fine taking kind of 2R in this case. And so we would do a market entry. Let me make sure this candle is closed first. So now it's market open, and we had a pretty wide stop loss in this case because I basically am looking at from where the retest happened, what are my two lines of defense past that. And so the first one is kind of these cluster of order blocks down here, and then the second one we had a lower order block here. So those are my two lines of defense. That's why the stop loss is down here. A little bit more aggressive, you could bump it up to basically where it retested. Would have doubled your risk to reward in this case. And I have some analytics on which pairs it would make sense to do that with or not. But I'm just going to show you guys the kind of conservative model for now. But we will place order here. Again, taking 1%. We can do, it's technically a market buy, but we'll just do this. And then this one pretty much tagged the take profit immediately. Doesn't always happen, but it's nice when those trades happen. So yeah, let me know if there's any questions with kind of any of these trades. But again, just to review, this is a falling wedge. We had a breakout. There was a retest a little bit before New York Open. So by the time we got to New York Open, this is the kind of third entry trigger that I went over in the document called recent retest. And we, put our stop losses, two lines of defense past the retest, and targeted out, 2R plus. So really kind of straightforward win this day. Let's go to the next session. And there are often, we do have another trade up here. So I think this is the next session. So yeah, oftentimes when you get pretty explosive price action with this strategy, I kind of know off the bat, I'm probably not taking a trade today with the strategy, because you need the price to develop a little bit before you can see these, rising and falling wedges. So if you see, pretty explosive, usually on CPI, it's probably what is known NFP. NFP or CPI, you'll see pretty explosive moves often. With this strategy, those are often no trade days, because there isn't it's literally just a straight up candle or straight down, and you have to wait for the price to develop a little bit to give you the patterns. But the next day we did have another trade. So we'll kind of fast forward here. So we had, these lows here that we were looking at for the downside, and then shortly after open we had kind of a nice higher high here as well. So pretty easy to see rising wedge. And then let's kind of go forward and see where this retest occurred. So I'm looking for a breakdown. Not quite. All right. So this is one of the kind of, I'll zoom in a little bit so you guys can see a little better. Pretty strong downward thrust candle that breaks down and closes pretty near the bottom of the candle. So whether it's a red candle or green candle, as long as it closes back below the trend line here, then I would consider this a valid breakout. And so even though this candle is green, this kind of goes back to the definition, I guess the second one that I showed you guys, where as long as it is if it's a strong candle, as long as the second candle also closes outside of the pattern, then it's also a valid breakout. This is just, on the opposite side, obviously, than this one. And so we will do limit entry on the kind of where it retests here. So 1%, sell limits, and the two lines of defense. So we have, if there's a, basically there's there's a fair value gap here, and then the order block up high. And so that's kind of how I would define the two lines of defense. Yeah, thanks for stopping in, Azrik. We're going to be running these pretty often, so we'll catch you next time. And then the take profit here, we had a fair value gap from this big candle and basically targeted kind of, that was the first level that really gave us a 2R. So we'll kind of play through and let this one play out. And this is, again, another reason why I kind of recommend doing CFDs instead of futures, because with futures, you would have had to close this for like a tiny loss by this time the session ended. But with CFDs, if you're able to hold it a little bit longer, this one did end up being a win. Just took a little while to play out. Got pretty close to our stop loss. All right. So yeah, let's look through a few more examples and then we'll do some Q&A. So I'm going to replay back up to here so we can look at this next example. All right, I believe this was a loss. So we had a rising wedge here, almost like a parallel channel. And you can see kind of before market, we did have a confirmed breakdown. We've gotten 2 red candles back to back. The stop loss in this one was actually really tight. By the time it retested, we had a fair value gap and then an order block kind of just above it. So those are our 2 lines of defense. And yeah, I believe this one ended up being a loss, but we will record it nonetheless because every strategy has losses. Yep. So pretty quick loss in this one. Sometimes, especially the tight stop losses, you're going to have lower probability on those, but also you can catch some big wins when they do play out in your favor. But yeah, had a loss that day. There were actually 2 losses the next day. So 64% win rate, you'll run into pretty common like 2 to 4 trades in a row will kind of be like your average, like, loss streaks, I guess. Shouldn't be, every now and then statistically it could be higher than that, but shouldn't have that many losses in a row beyond like 2 or 3 most of the time. But so to start this day, there was a rising wedge. You actually hadn't, so there's a smaller pattern here. You can see kind of these 2 highs here formed your rising wedge. And we had a breakdown candle. So this is the breakout trigger, the second one that I went over in the spreadsheet, where you kind of get a strong break of the pattern like early in the session, and then sometimes it doesn't retest. So for these, it was a market entry at the candle close, and the stop was at the open. So we'll record this one, even though it's, we know it was a loss. So 1% sell limits. Sorry, I probably need to do market order for this one. Place order. We'll do markets. And this one was a quick loss, I believe. But yeah, so another thing that I did do when I was backtesting is if it provided like both breakout and retest triggers, I would generally record both of them. So those days you can often see either 2 losses or 2 wins. But in this case, we obviously saw the breakout trigger, but then it also retested here. So when I was recording the backtest, I did record kind of both of these, and it did end up being a loss. You'll see in here. Well, we've already recorded the breakout loss. But yeah, unfortunately in this case, both of them ended up being losses if you held through the end of it. So I think so far we've maybe seen half losses, half wins, which pretty in line with the overall win rate. So let's fast forward to this next day. So we had another kind of rising wedge here, that you guys can see from trend line kind of leading up to it. We had pretty strong breakdown candle and then a green candle up. So, or or sorry, no, this was the first time that the breakdown was confirmed. This candle did have was pretty strong breaking down from it, but the kind of wick against it was pretty strong. You can see in the I have a very specific rule that the I guess wick against the move can't be more than 25% of the body, and this is one of those things like anything you can do to like remove subjectivity with your models is going to be helpful. So in this case, you can use this like measurement tool. The body of this was 0.25% and the wick was 13%. It's almost half of what the body was, so pretty sizable like wick against it. So I wouldn't count this as like a strong kind of downward thrust candle, and instead waited for these two red candles to confirm that we did have a breakout. So then we're going to look for the retest. We'll place our limit order here, the limit order, and I believe this was a weekend, so we would have closed it early. But I did notice. Let's let this one play out. Sometimes when you did weekends, it would be a win. Sometimes it'd be a loss. But I think over time it was better to hold the trades. This one would have been a loss if you held it, but I think from testing all of the ones that were closed early on weekends, you could have left them open and you would have been fine for this strategy. But yeah, let's do maybe a couple more and then we'll open up for some questions. All right. So fast forward to open. Sorry, I'm not sure why it's putting us at 5:45 here. 6:30, 7:15. Okay. So we had a kind of breakout from this falling wedge here, and it was kind of hanging around the entry. And so this was like kind of one of the unique cases that I put in the documentation that you can kind of market enter on these retests if it's kind of back into the pattern as long as it hasn't cleared your two lines of defense yet. And so in this case, we still had multiple fair value gaps below for our two lines of defense. And so in it, was still a valid retest after breaking out up here. So this would have been a valid kind of market entry retest. And we'll do a buy limits. And this one was also a pretty quick win, I believe. Nice. So yeah, let's do maybe one more example. I'm not sure if this next one was a win or loss. All right, so rising wedge here. We had a breakdown followed by a really strong thrust candle down, followed by a green candle, but it closed below the rising wedge here. So valid breakout, and we would be looking for entry on the retest with two lines of defense here. So since this fair value gap right here was would have been tagged on the entry, I don't count this as like one of the lines of defense. So we basically have this fair value gap above and this order block above. That would be our two lines of defense. And then we were targeting this fair value gap down here that gave us a little over 2R. So place the order, sell limits, and let's see what this one would have done. Nice win. So yeah, went through quite a few examples to kind of review the strategy. Like I said, it's nothing crazy. 50R per year is what, like, what's the math on that? 50 divided by 12, about 4R per month. So it's nothing crazy. I think the best months you'd see maybe 8 to 10R. But it gives you that nice equity curve that you want to see, where the wins are outpacing the losses and the counts are slowly growing over time, which is kind of what you need to pass, prop firm challenges, make profits over time. So yeah, with that, I wanted to kind of pivot back to the Discord, see if you guys have questions about the model, about any specific components of it, my process for kind of developing it, or any questions for me. Obviously, this is kind of my first stream with you guys, and want to get some feedback and kind of hear if there's any questions you guys have while we go through these. So feel free to message in the chat if there's any kind of questions you guys had. A few more setups and trades. Yeah, sure. We've got some time. So let's do. So I had a note here that this next trade wasn't 2R. I believe this is the next day. All right. So sometimes when you broke out, the two lines of defense were like really deep into the kind of pattern. So when we finally got our kind of confirmed breakout here, if there was a retest, we had an order block here, but it would have been tagged like when you were entering, so I wouldn't count that one. So you had this low here and this fair value gap down here, so pretty wide stop loss. And unfortunately, the 2R take profit would have been larger than our measured move in this case. So this is one of those trades that I just wouldn't have taken, even though I might have been able to catch a win on it. I don't want to go for too ambitious profit targets on this, so I didn't take this trade because the stop loss was too wide. So there's a note there. I saw I think Robert or someone typing another question. Feel free to ask anything while I'm running through these other examples. So next day we had a rising wedge. All right. So we had a rising wedge here, and price had kind of broken down from it and retested just before market open. And so this is a recent retest, and so it would have been a market entry right at New York Open. If you wanted to go aggressive, you could bump the stop loss here, but the two lines of defense on retest were kind of this order block, this green candle kind of in amongst all the red ones, and the high kind of created right around there as well. And then for the profit targets, there was a fair value gap down here that gave me at least 2R. And I believe I closed this one again. Yep, I closed all these like before news. But I'm curious if this one would have been a win or loss. Let's let this one play out. Sell markets. So, yep, this one would have been a win. So, again, like I generally was closing like all of these during like any red folder news because I just at the time didn't want to deal with news volatility, but oftentimes these like 10 a.m. Eastern news things, you could just hold them through and it would be fine. So Robert asked the question, you use fair value gap and order blocks as line of defense. What do you do if one isn't there? So either one of them, like one of them is going to be there because generally like you can kind of see here if you have, I guess, yeah, we can look back at these two examples. So either you have like only green candles like breaking up, in which case you'll have some fair value gaps kind of along the way. And there was also a low here. I would use fair value gaps, order blocks, and like, swing lows or swing highs. So for this example, we had a low here, a low right here, and then this fair value gap. So those would have been two lines of defense. In this case, in this most recent example, we had this kind of green candle right here for our order block, and then this kind of slightly higher swing high level right here as well. So those are the two lines of defense for this one specifically. And again, I did some optimizations on this, and I'll kind of show you guys at least a little bit of that before we end. There was kind of a more aggressive way to trade the strategy for these retests, where instead of doing two lines of defense, you would just do kind of where it retested, and often it would multiply your risk to reward pretty significantly, but obviously decreases your win rate a bit as well. So I guess while I'm talking about that, I did put in this documentation the exports of the back tests, the exports of the forward test, and also some trading view charts. I don't know how far you'll be able to go. Trading view only limits you to certain replay to go so far back. So you might not be able to see all of the forward test trades, but you can go back through and like see, the actual trades that I took if you do want to try and backtest this yourself and kind of see what trade triggers I used, what times did the trades take place if you want to practice it yourself. And then specifically in the kind of analytics, I think this is the forward test. So I would basically export all the trades, and this is something I'm going to do with have a session, educational session with you guys in the future to kind of go through my optimization process. And so you'll see here, I basically added this column saying, what would the result have been if I only use one line of defense instead of two. And then essentially in the analytics, it's essentially all the stuff you see in an FX replay, just, also in Excel. I would kind of compare the kind of P&L and statistics from using one line of defense versus the standard kind of conservative one, and see how much would it impact the results. And so for gold, I basically kind of took the P&L from the one line of defense versus the other ones, and noticed it increased the profitability like 29%, but it also decreased the win rate about 15%, from a little under 70% to a little under 60%. So technically, it would be kind of, I say plus EV, plus expected value to use one line of defense for gold. But I also noticed in the forward test that it wasn't that consistent. I'm trying to remember. I don't know if I have it in this spreadsheet specifically, but essentially what I was noticing is that in this larger sample size backtest, when there were, hundreds of trades, it was showing that it was better to use the kind of one line of defense. But in the forward test, at least that I was doing, it was more inconsistent. So I think for gold, I ended up deciding to just stick with the two lines of defense. But the US 30, which I also traded this strategy with, was definitely like better if you just did like the tighter stop loss. So in the documentation, you'll see a few like kind of blue notes here that I would kind of use a tighter stop loss for US 30 specifically. And that's what that's referring to. But yeah, I think that's probably good enough for kind of showing you guys the strategy. Again, if you have if you want to try and test this for yourself, I've shared in this document that I've shared with you guys the export to the strategies, so you can literally go back through and try to backtest the same time periods. And feel free to ask questions if you are curious about why I took this trade, or I took this trade here that I didn't see you take, why that. So Linda, great question. How do you define an order block? So essentially, and I could potentially Google and find a graphic pretty quickly, but essentially, let me see. We had an example right here. Essentially, all an order block is like I don't know what the metaphor is, like the odd duck in the pack or something. You have, in this case, a bunch of red candles on this down move, and there's this kind of standalone green candle that's just like by itself. So essentially an order block is kind of, in amongst a bunch of same colored candles, a candle of a different color. And often you'll see it before a reversal. This is kind of a, it's not necessarily unique, but this is the case where like it's kind of during the move this is happening. You'll also see it with reversals. So you have a bunch of green candles here, and you can count this kind of top green candle before the reversal as an order block as well. So it's either going to be kind of the last, for a bearish reversal, it's going to be the last kind of green candle before price reverses, or it could also be kind of a unique candle amongst a bunch of others that are the other color. But yeah, Investopedia probably has some great graphics and stuff as well. You can Google that too. But yeah, it's a new, something you don't hear everywhere. And there's no dumb questions. I had to learn all this stuff myself, so it's a good question to ask. So my camera just got a little fuzzy. Focus. I guess, yeah, are there any other last minute questions for me, for the model, anything else? If not, we'll go ahead and wrap up. And then Thursday, I did want to mention, we're going to do a kind of educational session about like my back testing process from like start to finish, as well as like what are the main components that I think are like really helpful to have for any trading model. So if you guys are able to join Thursday, that's basically what we're going to be going over then. But yeah, if there aren't any questions, we'll call that a wrap. But thanks to you guys for joining. We're going to be doing these a lot more frequently, and looking forward to back testing a bunch of things, seeing if different YouTubers have crazy strategies that we end up debunking, or we find some ones that are actually pretty good, and we can figure out mechanical ways to trade them. But yeah, thanks so much for joining, guys, and I'll catch you guys later. Talk to you soon.